Hey guys, it's Will. Hopefully you're having a great day today. In this video, we're going to be going over APLD stock and how it is building some of the infrastructure for the future of AI as well as quantum and data centers and how that might be something to pay attention to if you're looking to invest in the future. When it comes to APLD, we also trade it live each morning if you ever want to be there in those live sessions. It's the second link below. And we also, if you're on, I know we had a lot of subscribers on the first access list for our AI virtual stock trading system. It actually just launched just a week ago, and you can get more details on it in the first link in the description. So take a look here, APLD. It's been super volatile, right? So we started kind of covering it back end of 2024. At one point here, 2021, it had massive surgences and momentum, and then it sold back down, and it was hovering on this slow but steadily rising support here, right here. You can see the support from 2022 to 2024 there, 2024, and then in 2025 we just saw a bounce there. Looks like last time we did our analysis, we were anticipating this move, this bounce, to potentially swing up to about $12.50 again. Looks like it's actually made a fair amount of that move already. So from that last video or this last announcement that we've seen on YouTube here when we made the video, about 90% increase over the last month and a half, 2 months. So a lot of volatility here into 2025, but now we're seeing APLD hold this momentum, holding above that 200-day moving average and the EMA. So there's three things we look at when identifying a good deal in the stock market. And the first thing that we're going to identify is the market. APLD specializes in building data centers. As you can see, they say the epicenter of AI is built here. They also have this announcement for Macquarie to invest up to $5 billion in applied digital AI data centers. Outside of that, they share how they construct these data centers and how they're different by design, revolutionizing accelerated computing. They focus on building infrastructure that delivers optimized performance, scalability, and this is a key efficiency here, energy efficiency to drive innovation and sustainable growth. So you might see this comparison on their site, their next gen data centers versus traditional data centers. The biggest thing that you notice is really a focus on scalability and also engineering them to bring workloads directly to the point of generation. So while a big issue might be that data center uses a lot of energy, and that could be fossil fuels or oil and gas. It could be related to water if it's like something related to hydroelectric. But in this case, they're really saying, okay, we're going to focus on these sustainable resources like air, wind and air. You got the grid for sure, but you also have solar and hydroelectric. So when that is something they focus on, it kind of builds a focus in sustainable energy. So they also have partnerships with Applied or with Supermicro Computer in the as Supermicro Computer specializes in kind of those the actual, in a nutshell, the shelves or the structures, the shelves that house all of the GPUs in most data centers. So Supermicro working with NVIDIA and working with xAI. You have Applied Digital working with Supermicro, but also working with NVIDIA. They're fairly backed by NVIDIA as well. And they focus, you can see NVIDIA, Dell Technologies, Intel, Hewlett Packard, and much more. So that's kind of the market, right? One of the fastest growing markets, building a lot of the infrastructure for what could be the future here of AI. So in the AI boom, really good market. When we look at their financials, they have a $1.6 billion market cap, current price at $7.36. Their financials have looked good year over year, increasing revenue. It's up to $52 million in their last reported revenue. They missed revenue a little bit there, but their earnings per share came in green year over year, growth and net income increasing 42% year over year, still holding negative. So, you don't want to see a negative net income, but it's okay. They're maybe investing back into the business. But for $1 billion in market cap, the financials look okay. You'd really like to see with $1 billion in market cap, always, you're kind of looking for positive net income, and that's what you want to see. But not always that the case, especially if they're investing back into their business, so revenue. How many of you guys saw as well some of the holders, the investors in APLD? We know that there's a lot of hype articles. You could see them all the time. But one of the targets recently, a $12 target from JP Morgan or JMP Securities. And you might say, oh, why do these banks have targets? Well, just know it's also because they're most likely holding some shares. So if you look at the institutional holdings of APLD, you do have Vanguard, BlackRock, State Street, and you do have Morgan Stanley there and Goldman Sachs. Looks like we also are looking at JP Morgan Chase there as well. So, while there are some price targets that seem very favorable and nice, you also have to look at, the people putting out those price targets are holding the stock. Just keep that in mind as well. When it comes to the direction, though, with the financials and what we saw there, it does seem like they're increasing, if I'm not mistaken. Are they increasing their revenue? Year over the year increasing, but kind of maybe tapered off a little bit here in their last quarter. So, but still holding above $50 million in the last 3 quarters, which is pretty good. So beating earnings per share by about 20%. But when we're looking at them now, we're seeing this move and we're saying, okay, they made this 87% move. Now the next, swing is up here into this 200% total swing of about $12 a share. It's at $7 now. And this move happened over 2 months from $3 a share up to $7 a share just in about 2 months. So for them to make this run up to $12, the hyperbole case is the straight up. We don't see it pull back and straight up, and it takes another 2 months, and then we're there at $12 a share. That's a very hyperbole case scenario, but looking at it now, the RSI and the MACD look overbought. It is still looking bullish, but more on the overextended side. So we could expect, even if you look at the EMA, so that blue line, it often acts as a support. So look at the last run that it made from $3 to $12. When it broke up, it would push up and it would look like it's making that move, and then it would sell back down to the EMA, and it would push back up, sell back down the EMA, maybe cross below a little bit, but that blue line kind of acting as a support and something that we can look at as a level at which it could pull back to. Now recently, same thing in a bear market, right? You see it sell down, it's maybe oversold, and we saw it push back up. And now it broke above that EMA. It's starting to maybe make this push up to $12. But again, it looks pretty overbought, up to $7.70 at one point there on Thursday. And then, so now when we're looking at it, that sell down to this EMA, so that would be a potential sell down from this price point, probably into this range, about a 5 to 8% sell down, I think would make a lot of sense. It would be healthy for it to sell down before continuing up. So again, if you take a look on a closer time frame, kind of see what I'm talking about here. It is straight up. The EMA is still a support there, but I think it would make sense that we could see it pull back a little bit more. I don't know. It is staying consistent, and it did pull back a little bit from 780, but it looks like the key levels to watch here are the level really at which it is now. I mean, you could kind of see this level, this support. See this support level at about $7.30. You got here $7.30 right there. And again, right there, support, resistance. And that's honestly, that's like where it is right now for the most part. That's really where it's kind of hovering. And so it is a key level, right? If it's going to be bullish, we got to see it push up more above that $7.40 range. As it has been rejected there as well. Not only a support, but also you can see a resistance there as well. So it just reached that level. And so what we're looking for, again, I think it can make sense it pulls down here before continuing up, but we'll have to watch it here at Market Open. We'll be keeping a close eye on APLD. And if you have any comments on the stock or thoughts, feel free to drop them down below. And if you want to see our daily live sessions, I would love to have you there in the second link down below. If you ever want to join us in Stockmate, we do our daily live trading 6:30 a.m. Pacific Standard Time. And did I mention you get a free t-shirts for Stockmate? I'm not wearing it, but one of our cool Stockmate t-shirts, super comfortable, we're including for free for Stockmate members. On top of that, we actually just recently in Stockmate, some of our members were seeing that it's helpful to get the reports that we release, like this Big Bear AI report. This Big Bear AI report breaks down all the sources and what we're looking at for the moves with Big Bear, and we do a full in-depth analysis. If you ever want to see the earnings for the upcoming week and which companies are reporting to watch, they're in Stockmate there. And then on top of that, you also get, for example, this book here that can oftentimes serve as a very good tool for you if you're trying to just learn how to take emotions out of trading. So a while back when I was actually trying to create a manifesto for myself that would help me to be able to stay on track. And so differentiating between ordinary traders and profitable investors and traders is the difference between, having a plan or emotional or FOMO, avoiding the pump and dumps and things like that. And when it comes to this book, it's included for free in Stockmate. Covers emotional analysis, examples of a trading plan, the different ingredients that go into formulating a trading plan. And I really do like the emotional IQ section as we talk about emotional intelligence, which plays a fairly big role in the investing world. So again, we're looking at this move here. We're going to see if it holds this $7.50 range and hopefully push it up to $12. Again, if you guys want to join us in the live sessions and get that book and everything I showed you for free as a bonus, it's the second link down below. We got a huge sale there for Memorial Weekend, and it's not getting better than this. So I encourage you to simply take a look. Thanks so much for watching. If I earned your thumbs up, smash the like button. Do consider subscribing. I'll catch you guys in the next video. Take care.